We'll do it live.
Okay.
We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks.
All right, welcome back to the Capital Mindset Show, everyone. Hope you guys having a great day as always. So let's get into it. So we're doing a little bit of an earlier show than we typically do. I got the chance to do it, so I said, why not? And with everything going on, I think it's appropriate. It's fun, good time to discuss things. We had a few earnings reports past couple weeks now. We have a few big ones after hours today. A few of my major holdings are reporting. Yeah, we'll see what's to be expected. We'll talk about some of these earnings that we just went through. I'll also touch base on some of the stocks I've already discussed publicly, and kind of give you guys an update. Since I've already talked about them publicly, I think it's fair enough to also update my thoughts on them. I do want to do touch base on some, let's call it housekeeping. In the description below is the link to the Capital Mindset Club. If you're interested in subscribing, I'm letting you know right now, just use the PayPal link. Do not use the Stripe or direct credit card link. That is under review of some sorts because we're having a technical issue there. So just want to let you guys know in advance. If you already subscribed, don't worry about that. But if you're looking to subscribe right now, do not use the Stripe or credit card link. Just use PayPal. All right, bullish PayPal, I guess. All right, but on a serious note, let's get right into the earnings that we just went through. So let's discuss, which one do we want to go over first? I think we can go over Alphabet. And let's share our screen. And we'll talk about one stock that I've been recently getting a bunch of replies for. The video has been doing fairly well recently. FMC, apparently they reported earnings, and the video I made a year ago aged pretty well, apparently. So a lot of the risk panned out, and it collapsed about 30% after already underperforming by quite a substantial margin. So we'll kind of look at that one as well and do like a revisit. I got a lot of nasty comments at the time because the YouTuber going by Sven Carlin at the time said it was an interesting opportunity, and I addressed how they didn't, see any of the risks or mention any of the risks. So I think those risks just panned out. I mean, they were also easy to find, but I will do a quick update there. So Alphabet's earnings, I think, were muddied by the lack of enthusiasm by the management. The management has always had trouble communicating with the investor base and the market at large over what is the progress they've made in the various avenues or projects that they're pursuing. They focused a lot on the this future deployments of LLM models and tool sets. But one thing that I think they didn't discuss enough, and we talked about it last night in the club, was Alphabet's backlog, cloud backlog. So of course, the main KPIs that you're paying attention to is advertising. That's their bread and butter. That still was growing nicely. We're not seeing deterioration, at least just yet. We also saw strong growth in services, operating income, operating margins also grew nicely. Cloud came under what analysts were expecting, but honestly, at the end of the day, still pretty strong growth. Going into earnings, we were having a little bit bursts of some rallies here and there, up 2% there, up 1% there. And I think going into it, the market was sort of expecting a nice print. It looks like, at least for now, we'll see what Amazon reports after hours, that every single hyperscaler besides Meta, but Meta is an internalized one, has sold off. So Microsoft reported they sold off 5%. Alphabet reported they sold off 7%. Amazon reports tonight. We'll see what happens. But we'll get into the specific things we're looking at for Amazon. And it's the same as the last video I made a quarter ago. The KPIs really just don't change. The thesis hasn't changed from like 2 to 3 years ago. So a good thesis, I don't think, changes dramatically once you're in an investment. You're kind of just keeping up with the same stuff. And I think narratives do end up driving or fluctuating quite drastically. And what we'll talk about right after Alphabet is this heightened volatility that we've been seeing. All right, but going forward with Alphabet, one thing that I will say is the management, while they're very bad at selling the stock, and I don't want them to sell the stock, their execution on a business front is pretty good. I don't really have any complaints on that front. As far as what I'm doing with my position, it's pretty much, maintaining, treading water. I probably will be, or have been, adding to the position, but probably will be adding more if we see continued weakness. It's not really oversold just yet. On a multiple basis, or sorry, on a valuation basis, it's right around the price of adding for me. I came with like a fair value or buy price of roughly in the low 190s, mid 180s. And then obviously, if we get below that, that just gets better. It's not a position where I would probably consider, an options focused strategy just yet. We already did that earlier last year when the stock was trading under the fears of, all this LLM shenanigans. So it seems like for the time being that Meta has been executing at a much better pace than Alphabet in a variety of ways. Meta, unlike Alphabet, doesn't have an externalized hyperscaler. What I mean by that, let's define that. So what I'm trying to refer is that Meta doesn't sell their compute to third parties while Alphabet does. The CapEx increase is also, and I don't know exactly what the market looked at and hated about it, because I'm just speculating with this, but it could have been the CapEx. It could have been the miss on cloud. If someone claims to know exactly what the market sold it off on, maybe they're just saying stuff. But the CapEx spend, it's not the first time we've seen where a company starts to say they're going to spend a lot of money and people hate it. I saw on Twitter a few accounts that with a lot of followers criticizing the CapEx spend, saying they're getting no returns. But then I saw that they were clowns because they were saying, oh, this is just like Meta back in 2022, that they were spending money on nothing. And then I know the person doesn't read because, of course, if you read the filings of Meta back in those days, you knew exactly they were spending money on, and really nothing has changed. All that's changed is narratives, and price tends to drive narratives. And you get a lot of these, let's say, stories start to just like come out, these fabricated stories, and they spread like wildfire, and they become almost truth to a lot of people. So I tweeted out 2 weeks ago something that was relevant, or sorry, not 2 weeks ago, last week, something that's relevant even to what happened this week. And we'll talk about the tariffs. Remember that I also like to tweet out some jokes, so we'll talk about the Trudeau picture. And I know you guys thought you weren't gonna hear about that, but this tweet on January 28th at 3:30 p.m. Is referring to the quick sell-off and the rapid increase in share price for most stocks that basically recovered. And what I'm trying to talk about here, or what I'm trying to address, is basically how these narratives start to form and they spread again like wildfire. And you have, if you go on FinTwit, if you go on YouTube, these powerful stories just infecting everyone's minds. And sometimes I think that you can take advantage of this if you stay calm, if you try to remove yourself from the prevailing groupthink, which often takes over discourse. So I'll read it out loud. And just like that reminder, be aware of prevailing narratives are often driven by price action, not sound logic. You'll encounter countless explanations, but many lack the basis or rigorous analysis or rely on skewed interpretations of available information. Stay critical and think independently. This is very applicable to a lot of scenarios. You might be thinking of them right now. Meta, Alphabet, CRM, were in 2022, like perfect examples of that. And then more recently, you've of course had the sell-off with DeepSeek, what that did and how that didn't really make sense when you really sat down and thought about it. Thankfully, the market actually, I'm surprised, frankly, that the market has digested the information at least a day or two later and really come to terms with, okay, what does this really mean? But in the moment of, you see this wide panic and things that sell off that really don't make any sense selling off. Think of NVIDIA. I really don't understand why DeepSeek would cause a sell-off in NVIDIA. If anything, after even looking at available information, which for one, it was quite obvious that DeepSeek was not telling the full truth. Two, it was also very questionable to think that the CapEx would suddenly be contracting if you suddenly are basically saying that there's going to be a higher ROI or a more higher spend to efficiency. It would appear that if you have that budget and you have the cash flow, you could probably now spend the same and then get a lot more compute out of it or a lot more utility out of it. And again, that's assuming certain, let's say, linking conclusions. What I mean by that is like we're not getting into the whole debate of whether the LLM is useful or not. We're kind of both saying that, okay, the LLMs are useful or whatever these investments are useful, but they don't need as much of it. So of course we can get into the more detailed discussion about what really is all the spend. Is it the LLMs? Is it the compute infrastructure? And let's get into that actually. I believe it was the head of AI at Meta. He came out with some talking points publicly discussing the spend on LLM and the misconceptions. This should have been more or less obvious, but a lot of people don't think really. But a lot of people think that these companies spend billions of dollars in training these LLMs, and that's not the case at all. It's in fact, he didn't give us the exact number, but he gave us a ballpark range in the tens of millions, which is actually what DeepSeek spent on theirs. And a lot of the billions spent is on infrastructure. And so that's not accounted for in what DeepSeek discussed. But the infrastructure, the hypercompute infrastructure that's needed to support not just these LLMs that people are interacting with. And unfortunately, everyone calls them, they call that AI, and that's the only thing that they consider AI. But really, AI is like this umbrella term that encompasses a bunch of different tool sets. Some of them are internalized tool sets that I've discussed why Meta has performed the way they have in terms of massive improvements in business performance. And in ads targeting is, again, these internalized tool sets and predictive models that goes under the umbrella of AI and is very different from the LLMs. But for whatever reason, when you're talking to someone online, or you're talking to someone in person, you say the word AI, they immediately just think LLMs, and they're stuck in that, hallway of discussion. They can't kind of move past that. And so, of course, they get into the whole, this spend is worthless. This spend is, not going to have a good ROI. And then what I get into is like, okay, let's assume that that's true. And then therefore, all the improvements in cash flow, you're basically just telling me that all these hyperscalers have insane, beyond what I can even imagine, cash flow margins, because as soon as they realize the investment is worthless and they stop, then suddenly the capex goes down, but then the operating cash flow, because they're not generating anything, because you claim that it's worthless, so they couldn't possibly be generating an economic benefit from that investment. By that extent, you're then implying the cash flow margins are massive. So you're basically making the argument that we should all be buying calls on these companies, but that's neither here or there, because the only real loser in that conclusion is, of course, like something like NVIDIA, TSM, et cetera, and on and on and on. Okay. So what we saw this week was another example of this mania, this hysteria of fear, and really quickly got bought up again. And that was, of course, with the tariffs. So over the weekend, the news was festering about, the Trump administration is going to put tariffs on Mexico, it's going to put tariffs on Canada. I saw very respectable YouTubers get very emotional about this topic, basically saying that Canada has this power to do this, and that, and this, and the United States is dumb for doing this. I'm not going to get into the whole political nature or the political discussion, but just simply put, it's more evident than not that these countries had a greater incentive to comply and not make an enemy of the United States economically, just simply because we are operating on a Euro-dollar system. I won't get into like the entrenchedness of it. I've talked about this in many videos and live streams in the past. Because we could literally spend the whole rest of this live stream kind of going into that. But in short, that it's not as simple as replacing one trade partner with another, because we're in a Euro-dollar centric world. within the Eurodollar system, the United States holds a very unique place with power economically with most nations, and they act as almost like a kingmaker of sorts. So I even shared a tweet, and I'll actually discuss this because I think it's good for everyone to remember. And after as you invest for longer periods of time, you start to, actually live through events, and then history starts to rhyme. So this is something I'll share with you guys. So I tweeted this on just about the same day that the tariffs were also canceled. So let's see. So U.S. totally died. I'm being obviously very, very sarcastic in the tweet itself. U.S. totally died in the great 2018 trade war. I guess many of you might have forgotten about the trade war that started in 2018. Markets never recovered, and China prospered since then. And China stocks rallied to new high after new high after new high. Now, of course, you can tell, or you should be able to tell from that, I am being very sarcastic, as China has not experienced new high after new high after new high. But I want to show first, let's show the chart. So Canada's exports to the U.S. surpassed China in the first half of 2024. This is from an article talking about, look, our trading partners, Canada and Mexico, are experiencing this boom, and then China has been experiencing this decline. As you guys may not know, or I think you should know, because that should be, it was headlines for a while in the media. China is going through a recession presently and has been going through a real estate crisis that dwarfs the 2008 financial crisis of the United States. So, and we all know about the whole bankruptcies of the real estate developers. But this puts things into context. So you may not remember that in 2018, there were tons of journalist majors who were telling you that this is terrible, you're going to be destroyed, all this and that and that and that. And by the way, I took the liberty of trying to find the articles, and this is what came up. The articles actually were deleted. I was surprised because I tried in real time, saying, oh, I remember that the Wall Street Journal wrote about this. I remember that the Washington Post wrote about this. Let me go try to find these articles. And they were talking about doom and gloom, and the United States is screwed. They shouldn't be doing this, blah, 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 blah. And of course, I was very surprised that they were deleted. And so I think we're the club members who I was talking to about this, because, at least I would expect them to keep it up and maybe not address it, but delete it is kind of, wow, I had no idea they would do that. So what I'm also kind of showing here is, remember that comment I just made about the kingmaker status. The United States is sort of that unique role, because they are like the demand fulcrum for the world in many ways. It's a massive portion of the global economy, and the consumer base of the United States is the envy of the world. If you are a company, if I'm a company that's operating in another country, and if you look at this, actually look at publicly traded stocks, and you look at the major companies of the world, you start to look at breakdown by revenue, and you can sort of get the theme that the United States is a massive portion as far as sales go. And if you were to hamper that, or severely, or even delete it, you would collapse the company or bring it to its knees overnight. So, and then we get into, again, we could get right back into the nitty gritty of the Eurodollar system, which we won't, but just, it gets more complicated. That does go a lot deeper than just that. So getting back into this, we had a trading partner of which we had over 20% trade with. And since the start of the 2018 trade war, you can see that it's declined. You also had continuation of the policies of Trump for tariffs on China with Biden. Many people may not remember or have forgot about that Trump did actually, Biden did actually extend and expand upon the tariffs and restrictions to China. And that only served to further decrease the amount of trade, because effectively all that you've done is, because you're the demand, you're the consumer, the power doesn't lie in the producer. That's a misconception that a lot of people have. The power actually lies in the consumer. And then if the consumption, if the demand changes, all that's going to happen is the producers are going to change their behavior. I'll give you an example. You're my customer, and then you suddenly say, I want to serve you. I need to serve you and get you to buy this product A. But you decide that you want product A in a specific way. You don't want product A just as it is. You want product A in a specific way. And now you're going to refuse to buy product A in the standard way we were doing business before. As a business, I can decide I'm going to continue to give you product A in the same way as before, and you're going to go elsewhere. or I can change my behavior and then still provide you product A as you want it to. And then most business owners will, of course, tell you that they will adapt. They will say the customer is always right, and I will comply by what the customer wants. So that, in an effect, provides that the U.S. in that way can become sort of like a kingmaker and basically funnel production to other places if they so wish. And so you have the loss of China is a gain for Vietnam. It's a gain for India. It was a gain for Mexico. It was also, well, Canada not so much, but Mexico for the reshoring thesis, as you may or may not know, was a strong beneficiary of the actions taken against China. They have a very skilled workforce. They also have a very cheap workforce. And they're also geographically close to the United States. So it also was pretty much a very attractive transition. But again, we looked at what's happening in Vietnam, and we're seeing a lot of the same things. So, but that's all over now. And the point is with all this, I'm trying to jokingly talk about the, again, the prevailing narratives, the doom and gloom that kind of occurs, and those tend to be your opportunity. So that increase in volatility is your opportunity. Because nothing really has changed. It's not the same as what we were in 2021, where we had where we did all those videos talking about the liquidity crunch, where to the point it became almost meme-ish to discuss it. But that's not the same setup whatsoever. We don't have this like prevailing, insane. Well, we actually do have, I think, some bubbles, obviously, like Fartcoin. Fartcoin's ridiculous. We have some stocks that are cultish and ridiculous priced. But for the most part, I don't see, in my opinion, and that's all it is, any systemic threat present. There are a few, like gray rhinos that I see. But of course, you can't see a black swan. That's the point of a black swan. But you can kind of see like gray rhinos, events that could be a problem. Like Taiwan invasion by China. We have, well, it's less of an issue, but it was still there. Debts of varying kinds, maybe being a little bit more concerning, but nowhere near where what happened in the financial crisis of 2008. But for the most part, nothing is breaking. Is the point. Nothing is really breaking, so there's not really that same concern. There's this debate about AI, blah, 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 blah. But again, when we kind of break down the arguments, and I can have this debate with anyone, I'd like to, we really get down to like, what are you implying? If you're implying the investment is useless, then yeah, these companies are monstrous, and we should all be buying calls. So let's see here. What is up, Noam? Current CM thoughts on Palantir. So that's one of the ones I'm sort of alluding to, that has this cult behind it. So the valuation, I mean, I think it's popular to say this, so I don't like to jump on the bandwagon, but the valuation is definitely definitely getting stretched. So there is a point where it would make sense, and I'll get into it. So if you look at the business is kind of strange. It doesn't operate the same as like most other SaaS businesses, because it has this consulting component, or it's similar to like a consulting firm where they provide almost bespoke software solutions to clients. What I mean by that is, like, we talked about this way long ago, and why Palantir is kind of like consulting-ish, but not really. So let's say I'm an oil company, and I go to Palantir, and then I say, hey, can you build me this product that does this? They will actually send engineers to the company, and then work with the company to build this bespoke solution. And then from that, the next oil company that comes around, they can utilize some of the things they learned. That they're obviously not going to carbon paste the same exact thing, to the exact specifications, but there's going to be a lot of synergies to be had between project A and project B for the same industry. And so there are some scale advantages that occur after the fact, but in the present, or in the first time go, there's going to be obviously that initial big investment. And there's a lot of SBC involved. These are very highly paid engineers, very talented engineers. They are producing legitimate product. It's not the same thing as some of the other prior like meme stocks. So the cult is behind something here, is behind something legitimate and tangible. But the valuation is more where we can have the debate. So on a gap earnings basis, it looks extraordinarily expensive. Yes. And then from a cash flow perspective, when you take a look at it in a different way, you can start to see that if certain things happen on the growth point, and then you get that scale advantage that occurs later down the road, and margins start to creep up, and then the cash flow and gap earnings will eventually kind of match over time, then we have something that maybe makes sense. But how probable is that outcome is like the question you have to get to, and how much of that is being priced in now. So those are like the questions you have to really focus on, because now you're looking at a $245 billion market cap. It's not where it was before, at 20, 30, $40 billion market cap. So now what is being priced in? For example, if you assume that, and if this happens, it will look like a okay price. 50% CAGR. Of course, look at the number I'm using, 50%. That's ridiculous. And if you do that and you model that out, it's going to look like it's a good price right now. Is the market pricing that in? Does that happen? Those are the questions you got to ask. But there are scenarios where it does make sense, but there are also plenty of scenarios where it doesn't. I have no skin in this game. I'm not short. I'm not long. I'm just like a bystander, kind of going, this is interesting. Let's see where it goes. Tesla, on the other hand, is probably, I can confidently say, is not only just cult-like stock, but there is like, I think there's coping and seething on both sides, on the bear side and on the bull side. I have, again, no position in Tesla either way, but I don't really see or foresee a possible scenario that justifies the valuation given the current trends we have. You have to truly believe that Optimus is going to be vastly revolutionary and is going to bring about this whole new market that does not currently exist. So, and you're going to assume that Tesla is the one to do it, which who knows? So it's a lot priced in. I don't think it's debatable at this point that it is a cult stock. It's a retail stock. But yeah. Okay, so I see some comments here. Yes, I noticed that a lot of the companies have actually gone the route of removing their DEI programs. So there is definitely a cultural shift happening. So for Palantir, there is a bit of a moat as far as the relationship with government. However, they're not the only ones who have that relationship, and government's notoriously also very price competitive. That's why Palantir's story is going to be very focused on commercial, coupled with government as like a support agent. So it could support the business. It have this extra business line, and if growth there is great, that's good. More growth, the better. But the commercial side is really going to drive the story, I think, going forward, and that's the exciting part, because the sky's the limit there. Are we shorting Ubisoft? I don't know. Uber, Fabio. Uber, leave Tesla alone. Uber. Okay, so Uber is a funny one, right? What is this? Fabio doesn't know. So today I have an opening, and I thought, it'd be fun to do a live stream in the middle of the day. I normally never do this, but today is an exception. Okay, so Uber. But yeah, going back to Uber. Wow, now it's up 6%. So this is hilarious, right? So the market sells it off, and you have optically pretty good earnings. When I look through it, they're growing in all of their markets. They're still partnering with all the self-driving platforms. And I didn't really see what the sell-off was for. I frankly just didn't. To actually, this is the first time I'm looking at this. So now I didn't even see that today it was up 6%. So this is a live reaction. That's actually hilarious. So talking about price driving narrative, this is hilarious. Because yesterday, I swear, you would go on FinTwit and you'd see all these people, talking a lot of bad things about Uber. But frankly, what I look at Uber, it's cheap. Uber's cheap. So I have a position in Uber. I have a synthetic position in Uber. I mentioned that in prior live streams, and how Uber was an interesting opportunity. As it continues to run up, the opportunity starts to fade. But I think it has a little bit before that opportunity is necessarily gone. So on a go forward basis, we had a few KPIs from other companies that presented an interesting, let's say, future for Uber, and that's the strength of the consumer. Uber continues to have a dominating market share in their selective markets. They have an ownership stake in Grab, which is also dominating its markets in Southeast Asia. Grab's also another interesting one, by the way. I think Grab actually is a lot cheaper than Uber due to complexity, but they have a great cash position. They are also great market position. They have a fintech arm that's also very interesting, and they got a banking license within Singapore, which is one of the hardest jurisdictions to get a banking license, by the way. But yeah, Uber continues to have a lot of interesting points where you can derive a thesis and say this is going to work. The buyback's also kicking into gear, and that was the original reason why the stock moved, and we talked about that. This move right here. So they already talked about the buyback last year, but for whatever reason, because markets are perfectly efficient, for whatever reason, the market didn't react to it until it was an actual press release announcing the buyback. Then the market reacted to it, but even though the management team had told you we're going to do this next year, it was somehow new information for the market. But yeah, so this was a great opportunity to accumulate. Are you still in Intel? Oh, no, not for a very long time. But I could talk about Intel. Let's see. Of course, yes, I'm still holding Google. In fact, I'm adding into Google. The Google earnings reaction, I can't, like I said earlier, I don't know exactly what the market didn't like. Looking at a few of the key performance indicators, they appear to be still good, still kicking on all gears. They just have a management team that doesn't communicate the best. In fact, there was hardly any mention of some of their success points, such as like their backlog, and there wasn't an emphasis of it. So AMD who? Oh yeah, AMD is another retail stock that people are doing as a catch-up trade, I think. I feel like people are buying AMD as a catch-up trade to NVIDIA when it shouldn't be even looked at as such. AMD, I think, has a greater threat from custom silicon than does NVIDIA, because the whole argument to use AMD is going to be centered around the cost per compute. So it's an efficiency argument relative to NVIDIA, because you have NVIDIA that has absolute advantage, but then you can have relative advantages in other forms of silicon, such as either custom silicon via the ASICs or AMD, which is the like more of a direct competitor. And then you have other parts of NVIDIA that add to the moat. Of course, it's the actual support mechanism, the software behind NVIDIA that enables a lot of the usage of the actual hardware. It's not just the hardware by itself. So what underpins that, like CUDA. So the moat of NVIDIA is very large, and I think a lot of retail investors are not thinking about this properly, and they're just using AMD or thinking about AMD as like this catch-up trade to NVIDIA. It's like, oh, if they only take this much market share. I view AMD as almost like they take the scraps from what NVIDIA can't fulfill. So NVIDIA is maxed out at capacity, and then you get the CapEx cycle that gets maxed out at capacity. So that's good for TSM because TSM's maxed out at capacity. But NVIDIA, right, what we're focusing on, is maxed out. And then whatever they can't fulfill is being supplemented by these various ASICs or custom silicons designs. And then after that, there might be some use cases for AMD hardware, but it's basically taking the scraps. Although the scraps are big. Again, this market's huge, so the scraps are sizable, but it's scraps nonetheless. It's not anything meaningful. It's not the lion's share. I think that's what investors are failing to realize. And then so that would imply the valuation might be too high relative to the forward growth. And then when the music stops, because I think the music will stop one day. These are There's no question about that it is cyclical. It's just a debate on how long the music lasts. Because if the music stops tomorrow, NVIDIA will, it's way overvalued. But if the music stops in 5 years from now and we're in the super capex cycle, then NVIDIA still has more room to run. But no doubt AMD, when the music stops, will also get the same, relative drawdown. Maybe not the exact percentage, but relative to its current positioning, a form of drawdown. Do I think the music will stop? Well, there's two sides to it. Me thinking just like a very simple, basic analysis saying like, these are cyclical. At one point, the music has to stop there, but maybe you're making the argument, or that your question is going into the other side, which is saying, well, actually, there's now two overlapping capex cycles. So now it might appear as though there's like a continuous capex cycle, but there's really just two capex cycles that are just kind of consistently overlap each other. I've heard that argument. It's actually seems interesting if true. And then if that's true, then we're in like a paradigm shift where the likes of like TSM is no longer in that, cyclical business, which I doubt. I want to doubt because, it's the classical, this time is different. And I want to say that's the famous last words. This time is different. But if it is true that this time is different, then we'll probably see that. We'll look back in 10 years and say, oh my gosh, like, yeah, TSM's earnings were pretty much up and to the right with very little minimal cyclicality because the different business lines are having overarching cycles. And so it smooths it all out. That could happen. I don't know. So, thoughts on music stopping in your portfolio? I know the reference you're making. The old meme. Oh, you're so fucked when the music stops because but the music already stopped for those guys a while ago, didn't it? So, and it's funny because now they look for their new messiah. Yeah. And they're finding the funniest ones, which is the funniest part. So Intel is suffering from the same thing. So Intel suffering from the same thing about kind of getting the scraps, getting all these questions. I love this. You guys are bombarding me with questions. But the whole thesis of Intel is that it's execution risk. And what they're executing on is very difficult. So what TSM has basically proven to the world is that very few entities on this planet can accomplish what they can accomplish. So it's not just about having the money. There is there's a method to the madness to get a good, not a process going to actually get the highest yield when you're conducting fab services. So Samsung is in this as well, and they can't get anywhere near the yields of TSM. Intel's in there, and they were hoping to be number 2. This is how far ahead TSM is. You can't hope to beat them. It's just like, I want to be number 2. And so Samsung and Intel are just competing for that number 2 spot, and number 2 spot is so far behind them. So I'd say it's a huge mountain for them to overcome, and I don't think they're going to overcome it. I'm sorry to be a pessimist for Intel. TSM at this point is going to become it is a multinational company, but it's becoming also an American company with its investments in the United States, its investments in Europe. It's going to become a European company. It's going to become a Japanese company. So TSM is a global business now. And so it's not just a Taiwanese business anymore. We're going to really have to start to rethink about it and its pivotal role, similar to ASML, where ASML is a very pivotal role and a very strong presence in the semiconductor industry. TSM has put its flag down, and I don't really see their position being challenged anytime soon because it's very difficult to do so. So Intel, you have the design business that is okay. They're getting their butts kicked by AMD, and then they're kicking some butt back, but then so I don't know anything about the design business. I'm not going to make a prediction on that. But the foundry business, there's rumors that they're going to merge with Global Foundry. Global Foundry is good at the low end, while TSM dominates the high end and also has a presence on the low end. Global Foundry is basically threw in the towel a long time ago and said, we're not even going to compete there. We're not going to compete there. We're going to compete on the low end. So Global Foundries merging with Intel would now get them a foot in the door for high-end silicon, but will they succeed? Oh, I don't know. Okay, let's see. What's this question? Thoughts on Rob, the popular investor, throwing in the towel? So if he's actually throwing in the towel, I mean, I think the guy is a nice guy. He just has a process that, you know, doesn't yield maybe the best results all the time. He has some, you know, picks that he's done well in. I mean, the performance has been unfortunate. But if he's actually throwing in the towel, I hope that he just like goes back and reflects and then goes like, okay, what did I do wrong? Because yeah, the performance from what I recall is we've been in a bull market where it was fairly easy to at least do well. And from what I recall, it wasn't even remotely well. So, but yeah, he's a nice guy. He likes very complicated ideas. I question some of them a lot. I question his valuations before in the past. But yeah, I guess good question. Okay, let's see another question. Well, I'd say that the current cycle is different from historical cycles, AI-related GPUs, maybe until ASICs come in, but I don't know who benefits from ASICs. Who benefits from ASICs? Still TSM and the partner design companies. NVIDIA still has now a pretty sizable ASICs division, but that's Broadcom, Marvell, and NVIDIA. HII, I already saw this. This got wrecked today. I have no opinion right now because I haven't even looked at the earnings, but this starting to get more and more interesting. All right, so I got to look into their earnings before I have an opinion. A6, a shoe brand. That's good. It is a shoe brand. Oh, there's a comment already above. Are still in Evo. So not presently. I sold Evo now just about a month ago. So I'm about to basically get the ability to rebuy it and then still claim the tax benefit. But Evo, very interesting business in terms of valuation relative to, oh, not that one. We're just gonna do the Amsterdam price. So in a couple days, I'm going to be able to rebuy all the shares. But this company looks very cheap. I think it's worth a small allocation, which is where I had it before. And there are some risks, mainly in what happens with, well, let's actually discuss what happened recently. So they got confronted by UK regulators for providing their services or their services ended up in the wrong hands. Let's just say it that way. Their services ended up in the wrong hands, arguably to no fault of their own. But then the CFO, there was accusations that the CFO made they held back some disclosures to investors. And so the Swedish government is coming in and also now looking into them. And so that was part of the reason for the more recent underperformance. So the regulated markets versus unregulated markets, I'm not very concerned there. Actually, the guy we have in the club who's been following evolution for quite some time and has done very good analysis on it, told us well in advance what we're going to happen to the margins. But for some reason, maybe the market was surprised by the margin compression announcement, something that he was telling us for, I think, like 8 months now. So that was kind of funny. And then there's obviously the tax changes that kind of also throws a little bit of a complicated spin to it. The tax changes with Malta, where they're going from 7% to, I believe, like 15% or something like that. So overall, though, what you're looking at is something that's growing still, a business that's growing, no debt, lots of cash, a buyback program, a dividend, great margins that rival Visa and MasterCard. A moat described in the branding of their games, of which there are customers who will say, I want the Evolution game. So I'll go to the online casino that has the Evolution games. And so in that, they have their moat. They have the RNG business, very attractive. They don't lose with the casino. They only win with the casino. So they're the casino of the casino, as often described. So yeah, I'm watching these guys, and I probably will reinitiate a position very soon. Okay. Fabio Schwarzenegger attacking. I tend to agree with you, Mark. Look, I argue that the infra spend is not a reason to panic. The infra spend is necessary, and they will derive value from it. Recall that Google infra spend, it's really hard to pinpoint the exact value add, because arguably, if Google wants to be very competitive and remain competitive in their hyperscaler services, they need to build out the infra. And then not just not long ago, Google had an underwhelming geographic presence for their cloud when compared to Microsoft and Amazon. That's changed. If you look at more recent updates, they're now matching, if not surpassing in some geographies, but matching for the most part. And that makes them a lot more competitive. There are entities out there, I won't say names, but we had these discussions. There are entities out there that are very attractive customers that passed on Alphabet's cloud because of that reason. But now that they removed that excuse, they can now compete for these very attractive contracts alongside Azure and AWS. And if you talk to different developers and engineers, they have their preferences. I often find people say they have preferences to Alphabet or AWS. I rarely see an Azure preference. Azure, actually, I've heard a few that describe a preference to Azure because of its integrations with other tools from Microsoft. The new thing that they created that competes against Databricks. Oh gosh, whatever it's called. It's like they got rid of the Power BI and they changed it to something else. They changed the name effectively, but yeah, I've heard people say they like it for that ease of integration. But I think there's a plurality of people, engineers I've spoken to, that say they prefer either AWS or Google Cloud. So I've had a minority say, Azure, but that's anecdotal. Okay, so you think Amazon will pump good AWS numbers, or it'll be kind of clumpy like GCP and Azure as of recent earnings? Whoa, that's the unknown. I don't know, but if you look at CapEx, usually the CapEx was a fairly good predictor of where growth was going to go. So based off of, I think, okay, this is what I will say. If AWS bucks that trend, then I think it's going to buck the trend violently, as in it's going to go up a surprising amount. Because it will basically imply that there's relative strength in AWS, which would be very bullish, because what's causing that? So is there some advantage that AWS has exploited over its peer group that's causing this acceleration? And so that suddenly becomes a lot more bullish, Amazon. So I don't know. You think AWS Amazon will crush it? I think they can crush it. I think there's a high probability they can crush it, but we'll have to see. Yeah, exactly. And I don't think it matters long term. I'm in complete agreement with you, Mark. I don't think it matters long term. I think myself and the other analysts at Capital Mindset, we're all kind of we try not to be, but we're sort of like an echo chamber when it comes to that. We're like, yep, the council is in agreement. Yep. This is what's happening. The trends are remaining strong. And then I guess the only thing that changes between us is like the varying degrees of how bullish we are. So some of us are extremely bullish, some of us are bullish but not extremely bullish, but still bullish. And so it unfortunately becomes. Do you think the rise? Oh, we got a lot of questions. Okay, so we got hymns. Let's talk about FMC. So I did a video on FMC. let's go and revisit this video. Okay, so let's look at the comments. So I got all right, let me put this up. So you can watch the video yourself. It was a year ago. A warning, value trap, FMC stock. And you have Sven Carlin's face on it because he covered it first. And this video was sent to me. If you guys send me videos to react to or give my own thoughts on, I'll typically do this. But I haven't done videos as frequently as I want to, just due to time constraints. So I just settle for these live streams. But recently, I think people found the video and started, I guess, talking about it or complimenting it. And then, so this person, that we'll get to this, is like right, but for the wrong reasons. No, because I looked at the earnings or skimmed through the earnings, and no. The management is definitely coping. And that's probably more of a red flag than anything. So I don't even think right now it's an interesting buy. I think there's other ideas that are way more interesting. There's just a lot of risks involved here. So let's talk about FMC and what the premise of this video was. It was discussing on a high level the complexity of international investing and what you want to be worried about when it comes to these foreign markets that you may not have a lot of familiarity with. So Brazil is a major market for them. India is a major market for them. The United States is actually a smaller market. And FMC has a patented product of which they sell to farmers. You can do them like just pesticides and the like, so chemical business. And they charge higher prices than what the farmers could get otherwise with alternative products that where their patent has been either broken or expired in other jurisdictions. And so the point of concern was the political aspect of these countries like Brazil, where you had the farming population saying, hey, I could pay like half the price or less than that for effectively the same product. Why am I not doing that? And FMC can try all it wants to try to navigate through the rule of law and enforce patents or whatever. But at the end of the day, not all countries are created equal. And some might have greater protections, some might have less protections. But you have to take that into consideration when you're investing in businesses that do a lot of business internationally, and what countries they're particularly reliant on. So FMC has been on this destocking narrative for a long time. They've said it last year. It's the same excuse. So basically, the same reason what the management said was the problem a year ago, they say is the same reason that the stock is or that their business is underperforming today. In my opinion, this is continuation of the same issue that we discussed in the video, and the management is doing like a cope and seethe tactic here. So they're passing on the excuse to some alternative factors that are outside of their control and not really addressing the real issue at hand, because the real issue at hand is not surmountable. If that's the issue, it's not surmountable. Destocking is temporary. Of course, they want to say that that's the issue. And you don't, a destocking can look like the same thing as the current issue, which is customers are using other products, right? They can look like the same thing, but they may not be the same thing. It might not be that issue at all. It might be the other issue. And the other issue is very logical why it would be that. Because you have a product that, again, you're asking the customer, the end customer, to pay a lot more for when there's existing products that are doing the same thing for a lot less. So your moat has basically effectively been destroyed. So there is no moat now for FMC, or the moat is a lot smaller. So it looks really cheap, but I caution investors into buying into this stock. I cautioned them back then. I caution them now. I truly believe there's just like other much better opinions. And so this company roped in a lot of people at a much higher price, and it might continue to rope people in at this price. If it turns around, There will probably be a price where it makes sense, but everything in investing is like a beauty contest. So you do have to examine your universe of stocks and say to yourself, is this worth the risks versus these other ideas that I have on my plate? You guys are all your own investors, so you have your universe of ideas, and you have to make that judgment call for yourself. I don't know what other ideas you have. Maybe your other ideas are crap too. But yeah. So, but some of the comments aged like very interestingly. I might go through these and respond to them a year later. I remember this one that was very interesting. Let me find it. I'll share with you guys. This is the dumbest video ever, and Sven Carlin always mentions the risks. Although he didn't mention the risks in the video that I'm reacting to. The video that was sent to me to react to, he did not mention any of the risks. So I have no idea what the person's talking about. So I think he came out with a video. Someone sent it to me this morning. He came out with a video saying like, oh, you know, I make a lot of videos, so you have to like, and that's true, by the way, because I think he did mention that, you know, he's like, oh, I'm passing on this one. And so that was his updated opinion, that he's passing on this one. And so my comments are only on the video that I'm reacting to, not his follow-up thoughts. Because maybe he even watched my video. Who knows? He watched my video and was like, oh shit, I didn't mention that. So who knows? Okay, so I'm getting a lot of questions on HIMS. I do not understand the business of HIMS. I'm probably the worst one you should ask. I don't see the value there, but I don't understand it. Yeah, so all your question on HIMS. I'm sorry, it's an underwhelming answer. Why is Palo Alto going to the moon? Because it's overpowered. That's why. What do you mean it's going to the moon? It's not up that much. I mean, it's like just following its typical trend. Cybersecurity is a hot space. What can I say? It's a fast-growing and very attractive space. We've talked about Palo Alto and Crowd in the past. So I caution HIMS. My concern with HIMS, it's like it is a popular retail stock, and I genuinely get uneasy buying into companies that are loved by retail investors. It makes me uneasy. So I tend to be a contrarian. I like to see when retail hates a stock. You know, fund managers, I don't care either way. I don't look them. Maybe some I'll think of as a contra. I mean, I have my contras out there. Those do exist. Some of you know who my contras are. I try not to mention them, because if I mention them and then the contra, so like basically, if you do have a contra signal, what you don't want to do is tell the world about your contra signal, because there is a chance that your contra will look at you or find that they're a contra and then change, and then you lose the signal, and it could be a very valuable signal. And I think I have a few that are fairly valuable when they do certain things. It's not everything they do is a contra. It's certain things they do is a contra. But I don't like to talk about it publicly, because if I do, there's always a chance one of you guys who are watching, we have 234 people watching right now, one of you sends it to them and it's like, look, you're this guy's contra, and then you ruin it for me. And everyone else who's also knows about it and then is trying to listen to them. So your opinion on Broadcom? Well, their positioning is very attractive. I don't know about the valuation. We get into the same conversation about the valuation. So they're going to be how big is their ASICs business relative to the rest of the business? But the ASICs business is the one with the large future. So they're working with a variety of companies on their custom silicon, and all these hyperscalers have an incentive. Specifically, Meta has the most incentive to really get something going with their custom silicon, because they don't monetize their cloud. Meta is the only one that doesn't monetize it, and so they have the greatest incentive to move from off-the-shelf silicon to custom silicon. Okay, so Super curious your thoughts on Oracle. Haven't looked much into them. There's better investments out there, but I do feel like they might surprise a lot of people in the next 5 years. Yeah, so Oracle has been a great, almost like third-party supplemental demand filler for compute, is how I've been explained it, right? So I could be misunderstanding the explanation, but people who know a lot more than me about the industry, because we have a few guys who we like to discuss with, and I have a friend who works at AWS, but the way it's explained to me, or how I know or see kind of Oracle's positioning, is there's a lot of business to go around. So Oracle in theory should do well. And Oracle also serves as a really good third party build out of compute that can then supplement any excess demand compute from the other hyperscalers. And so they do also get business from that. This whole acquisition of TikTok, and no, I don't know where that's going. We do see that they're a pivotal key player in OpenAI's push for more investment in compute. Microsoft is spending their $80 billion, and then some more money is coming from SoftBank supposedly, and then Oracle's going to have a pivotal role in that. This is OpenAI basically saying we're desperate for compute, so we're going to be using another party, not just Microsoft. So we're not going to close ourselves off to Microsoft. So Oracle, being part of that group, being part of that cohort that still has a long runway, should do well. And I think in the sense of, like, you're saying, surprise people because everyone's looking at the other guys. Yes, I agree with you. I know there's some guys who are bullish Oracle, and that's some of the arguments they've outlined. I don't have a position, and I haven't really looked too deeply into it, so I'm basically just parroting. I would probably consider, but the thing is, I don't know as much details as maybe you do. Classic heroes. So you've probably done more legwork on that thesis than I. I don't understand HIMS, so it doesn't make sense to me. But that just means I won't buy it. So that doesn't mean you should sell it, but I won't buy it. So that those are questions. So I'll kind of walk you through the question you should be asking, right? So how do you see it progressing based off the research you've done? Do you see the TAM just like that attractive, and the profitability is really going to ramp up? What are the threats you see? Do your SWOT analysis on the company. And if you have a lot of gains in it, no one went broke taking gains. No one went broke taking gains. Thoughts on Nike? I'd pass on Nike. Nike's, I don't understand. People are paying that much for a shoe company with meh innovation. I feel like that's another retail stock that people are excited for. Again, relative to other opportunities, that's the thing. It's a beauty contest. Relative to opportunities, I just don't see it. I just don't see it. Do you agree that quantum computing will change life as we know it and make AI more efficient? Oh yeah, you're screwed with your quantum shorts, buddy. You're screwed. Okay. I love buying hated stocks. Boeing was my last one. Oh, Boeing is such a hated stock right now. Thoughts on ARM Holdings? So ARM longer term, I have this like tail risk that I'm worried about with their China division, because their China division, they actually outline the risk that basically the China division tells them what they've earned. So there's not really a lot of clarity there, which makes me very concerned longer term if something pans out from that, because the China division has all their patents too. They have all their designs. They're responsible for distributing that in China. I think that was a big oof. Basically, any company a Western company that is doing business in a foreign country and assuming Western normative narratives or Western normative business practices is foolish. The management is clouded by money and short-term returns, and they're making very poor long-term decisions. So, i.e., Tesla, I think, made a very poor long-term decision getting involved with China. While in the short term makes numbers look good, I think longer term it has been biting them in the butt, or will bite them in the butt even more, because no doubt China has stolen a lot of designs and tech from Tesla, but Tesla can't say that. Because Tesla's in the precarious situation where China gets into this whole. See, now I'm saying this, I'm banned from traveling to China. So, because I'm saying this out loud publicly, so I forget it. I can't travel to China now. But China engages in what they call, or what others call, elite capture. So they focus on specific industries and individuals and try to influence them in a particular way. And they spend a lot of money on propaganda. So one form of elite capture, and this is something that happened in 2019, if you guys have been following Tesla for that long. But in 2019, there were I think it was 2019 or 2020. The years start to blur together now. But Tesla started to blow up in China, and it became news, and the government called them in for an investigation. Of course, I think that was bogus. That was complete bogus. But it was leverage they were utilizing on Elon Musk. And not too long after, Elon Musk praised the CCP. And so you can kind of see or connect the dots there, that effectively Elon Musk had been what they call elite captured. And that doesn't mean he will always just like lick their boots. He will lick their boots as long as there's something in it for him within China. And then there's probably like what he says out loud, but then what he does, in person. He's probably been wondering, how can I protect and stuff, but he can't say anything publicly because that again would affect his positioning within China. So that's all that goes for any company that's doing business in China that is trying to protect some sort of secrets. You're a fool. You're foolish, and you shouldn't be doing that. You should be almost like, I would almost ignore the country entirely. So that's why I value a lot companies that also have zero presence in China. So Apple concerns me for that reason. Nike, coming back to Nike, concerns me for that reason. Although Nike is going to be different because what their designs are is more like fashion. Same with like Hermes, LVMH. That stuff doesn't concern me. But stuff like electric vehicles, stuff that's very technical, very you have protections in the West that may not be honored within China. Okay. So, are you surprised with the sell-off in ELF? Is it an opportunity? I think so. I believe it's an opportunity. We have earnings after hours today, and I'm not surprised with the sell-off. Actually, the valuation I did for the club members actually comes out to the buy price around in the 80s. So I've been waiting patiently to get this price. And we got it, and we'll see how it pans out. We'll see if this comment that I'm having with you, Rob, ages well, but I think ELF is an interesting opportunity. There's a lot of green space ahead of them in Europe. There's obviously North America domination that's still underway. I'm watching NVIDIA just tick up higher and higher. This is very exciting. Thoughts on AMD? I talked about it a little bit before, but AMD, I feel like retail investors are treating it like a catch-up trade to NVIDIA. And we feel like that's for the wrong reasons. We are still defense contractor pilled. Yes. It's a nice setup. What about Disney? Okay, so Disney, and I got two questions on Disney. I see you, Boba the dog. Disney. So we'll talk about Disney. So Disney reported earnings, and what we're seeing now is subscriber decline. So a bit disappointing. I'm actually surprised the stock actually held up as strong as it did. So it stayed flat. Netflix is kicking their butt. Disney is still choosing not to make as much money as it could. I remain adamant that Disney, if they changed their culture tomorrow, easier said than done, they would suddenly be in a position to make a lot more money than they currently do. They have a lot of IP. That's their strength. We can put that to the side. That's an over-discussed topic. Really, when it comes down to is the management of their IP is horrible. It's horrendous. I think it's objectively horrendous when you just look at the some of the IP and the movies that come out and the quality it does versus also the spend. Let's not get into the Star Wars discussion, but that's been one of the horribly managed IP, and the only reason why it's been made any money is because it is Star Wars, but not because the quality of the product. And you can tell that by the progression of the results. The progression of the results has been getting worse and worse and worse and worse. And same with Marvel. So basically, I think objectively at this point, you can say Disney mismanages their IP. The parks is the sunshine and rainbows part of the business. And then, within that, the cable business, or not within that, but the cable business, apart from that, also like a questionable part. there's been meaningful progression. If they make some of the cultural changes that some of the other companies have been coming out with, I think that would be viewed as a positive for Disney. And that's literally a ankle weight that they have keeping them down. We'll see what happens. Explain what's wrong with Adobe. Okay, so Adobe is under fire because of the amateur market. So what's the amateur market? Classical heroes. I am the amateur market. I like simplicity. I make YouTube videos for fun, right? So I'm an amateur. I'm not in the professional market. Adobe for a long time has said our growth is in the amateur market. I'm their target audience. I'm a guy just making YouTube videos on their free time, and you know, I like to make some thumbnails. I need to make some thumbnails. I need to edit a video, which although my video types don't really need editing because I just do one takes and go. So I'm actually maybe not their exact target audience, but someone who has slightly more complex videos than me is their target audience. This is becoming heavily commoditized on the simple amateur side. Again, when you get to more complex tasks, they're still king. On the professional side, they are still king. They will remain king. I firmly believe that. But the market is bringing under question the amateur market. Okay, so the amateur market here is what's under fire. I think that if that turns out to be wrong, it's going to turn out to be a really good investment. Or if they pull out some sort of growth out of their hat that we didn't see in the professional market, that's another reason you could be bullish. By the way, we have 265 people watching right now. So if you're not liking, subscribing, or doing all that jazz, come on. All right. No, I'm just kidding. But I think I'd also be kind of concerned because I do see the commoditization within the amateur market. You have StreamYard, you have Canva, you have all these other various AI tools that are coming out. Meta, I think, released a product already that's supposed to be like a creator editing app. I got to try it. But a lot of competing products are targeting the amateur side of the business. Professional side, no question, it's going to remain strong. Amateur side, definitely under question. And I think that's the cause of the weakness. So when you model this out, I think you want to focus on seeing what price makes sense with an assumed weakness on the amateur market. And if you assume that and it works out, maybe it's an interesting buy. So then I don't know what that price is. I haven't actually done that legwork yet, but that's like helping you out getting to that point. So that's the question you have to answer for yourself. And then you'll see, okay, what price makes sense for Adobe. Okay, there's lots of questions. I love this. How do you feel about Uber at current valuation? I like it. Even though it's rallied today, it's basically just returned to where it was before. I still like it. You know how I am, Brood. I have no opinion on it because I haven't looked at it. So I won't give a random opinion unless I've already looked at it. But so fortunately, I'm sorry, I have no opinion on HWM. But I know you're in the club, so I mean, we can look at it in the club. Company and luxury looks fairly priced, at least expensive. Montclair Curring. Any thoughts on this sector? LVMH pulled back some again. Hermes rallied a lot. Hermes is in a tier of its own, though. Hermes is like Ferrari, where they basically choose how much money they make. LVMH is probably the pick of those that you mentioned that I'd probably go for. I like LVMH's spread of products and all the markets that they address. They're also a serial acquirer, and I believe in their capital allocation strategy. No position for the record, but consumer seems strong. Consumer seems strong. So I think the question is just Asia. Asia is showing continued weakness, but North America and Europe seem to be holding up all right. So with LVMH, it's just Asia. Hermes, remember, caters to a wholly different kind of person that does not really get affected by any economic downturn. Hermes will literally, you'll see Hermes bags in, pardon my French, but not, well, actually, I'll say it the polite way, the not nicest places on the planet. You'll see Hermes bags in places where, you know, you have starving people, and the leaders, you know, have Hermes bags. They have daughters, they have wives, they have nieces, and then you'll see them with Hermes bags while, you know, the average person's starving. So Hermes is like immune. They have a completely detached customer base, and they're also politically immune because, like I just said, I was referring to basically some countries with socialist systems, and you do have more. You still see an observation of consumption for Hermes products. So. You need to talk about, okay, we can talk about high tide. I'm willing to talk about high tide because I've already publicly discussed high tide. So it's already out there. Andrew's attacking me. Mods, ban him. Oh, wait, he is a mod. Oh, no. Baba is half of Bob. That's good. All right, so HSI and Mondelez bottom, are they at a bottom? Who knows? That's going to be derived from cocoa prices. So we'll see what happens with cocoa. They're getting close. I think some of the club members, not myself, so I'm not taking any claim for this. They had like a rough price calc of like where they'd like to buy closer to $100 for Hershey's, and I don't think they've looked at Mondelez. So parroting that, haven't looked at it myself. So just a clarification there. Yes. No, well, normally I don't do it at this time. It's because right now I have a window of opportunity. So I'm doing it, but I'm sorry, I'm hampering your work. Okay, so let's talk about high tide real quick. So high tide. This has a lot of debate. Oh my gosh, it's up 5%. Oh my gosh, what a day. So I have the most complicated position you could imagine on high tide. Actually, yeah, we can talk we can talk about it just so you guys can have fun with it. But I looked at just buying the comments and was like, nah, too simple. That's a joke. That's a joke. But I'll kind of walk you through how I've played high tide. It makes sense to me, but so effectively, I'm playing high tide by selling puts, some varying legs. Some legs are in the money, some legs are out of the money. So the ones that are out of the money, like the 250 strike, I've been selling those for quite some time, grabbing the premium, buying commons, and then same thing with in the money puts, grabbing the premium, buying the commons, and I kind of measure it as far as like what my contributions are going to be from now till roughly the expiration, and kind of timing it in where it's completely safe, at least for me. So you got to be careful doing that. So don't do that unless you know you're in the financial position to do so. And then what I've been also doing is then when I have enough, I have tons of commons where I can just now sell contracts on those commons and then get premium on those covered calls for fairly far out of the money. You actually get pretty good premium both directions on high tide, and then taking that and buying more commons. And then so I've been just like cycling this through. And so when you look at it in the portfolio updates, it's like this like multi-legged position, and then you have the commons, which is like the simple one. But high tide's been very entertaining from that sense. Like it's the setup's nice. So then my total risk is basically the collateral. So the way I calculate is like the total collateral for the puts is like basically the dollar figure I have put in. And that's my max risk. So if high tide were to go to zero, but let's talk about, that's enough of the positioning. And you can probably rewind what I said or ask clarification questions in the comments, and or in the live chat, and I'll get to it. But let's talk about the business. So a lot of times this gets confused with growers. I have no idea why, even though Blake, friend of the channel, has said multiple times, and we're going to be on the high tide roundtable this weekend, multiple times to people. And it's like people are tunnel visioned on this, that weed co equals bad. Now, I completely get, stock is not for you and you don't buy it. That's perfectly fine. It's a market, dude. I'm not going to be like, you're safe in it. But I will say, if someone maintains the argument that it's comparing it to growers, then I'm like, no, dude, you're not thinking about this the right way. We've told you like 17 million times, it's not a grower. So if you compare high tide to Tilray, high tide to Aurora, not the right comparison. High Tide is a retailer, so you have to put the retail hat on and analyze it similar to what you would do to a Dollar General. A lot of the same KPIs, sales per square foot, cost per square foot for renting, the size of the square footage, the return on deployment, or the return on the opening of a new store. So how long does it take for them to get that return on investment? Well, we have a couple other KPIs that are exciting. The elite membership growth, so that you want to be paying attention to that, because that's sort of like them emulating like a Costco. So they have a membership model that goes basically straight to the bottom line at that point. And then that the growth there. Also, you want to look at the memberships for the base model, not the paid one, so not the elite one, and what's growing there, because then they also generate revenue on that as well. And that also generates repeat customers, market share of retail footprint. So all of that, what you would normally look for in like a Dollar General or any other retailer, is what you would apply here to High Tide. They just so happen to sell a product that is controversial, because a lot of people got burned. So a lot of people got burned in MJ stocks. I don't know if I'm already demonetized. I'm probably demonetized. So a lot of people got burned on MJ stocks in the past, and that already makes them a bit skeptical, investing in something like this, even though we keep repeating again and again and again and again that this is not, I repeat, not a grower. They simply sell the produce. And so they're not going to be affected in the same way that the others would about oversupply and all that. They're really shielded from that. And typically, this story has been, again, very contested, to say the least. Some people absolutely despise the industry, and they get lumped in. What we've been recently seeing, and we're going to be talking about this on the High Tide Roundtable, so I'm not trying to take too much of the talking points that we will be discussing there, but more and more of their competitors are going bankrupt. I think Blake was tagged in a tweet by someone saying, like, look, you said that Aurora, they're taking market share. Look at Aurora Cannabis, and they're doing great. They're killing it. And then Blake obviously responded properly by saying, what are you talking about? This is a grower. The other one's a retailer. They don't compete. They're not taking share from anyone. It's not that dynamic. So, but yeah, that's my quick spiel on High Tide. We're going to talk more on the High Tide Roundtable this weekend. Wow, look at all these questions. I am outperforming the market. I think, Rob, the performance we did last year. So last year we finished very strong, followed by the strong 2023. This year, I mean, if you're a year-to-date bro, you care. I believe now after today, I should be up like 11% or so. Some people are killing it even more than me, but I have some positions that, how do you say, are, for your second part of the question, Meta's been doing very well. Amazon's been doing very well. A lot of my mortgage investments have been doing very well. Because obviously, like, there's multiple ways to skin a cat. If you want more details on the positions, I have to say you got to be a club member. But so the stocks that I've talked about publicly, they've done fairly well. Trying to think of like any laggard, but the thing is, the one laggard I did have for this year recently just went positive. I guess Google is considered a laggard. Yeah, Google's kind of a laggard this year, but its position sizing doesn't really affect us much. In the options, no, because Uber is doing fine. TLN was, I should talk about TLN because I have talked about that publicly. So I took profits on TLN. I've actually talked about it 2 live streams in a row for sure, and I believe I talked about it last year too. So I want to clarify that I am no longer in TLN. I took profits on TLN. So we are done with that trade. Whatever it does from here on out, I have no idea. But I'll kind of talk about why. And you guys, it's fair for me to do that because I did already discuss it publicly. But we'll get to that in a second. So NVIDIA or TSM at these levels? Both. Both. I actually initiated a position in NVIDIA earlier this week. I'm positioned in a trade. There you go. I talked about it publicly, so we can talk about it in the future. But yes, I've initiated a position in NVIDIA earlier this week. I've initiated via synthetic, similar to I've talked about synthetics in the past. And we'll see how it works. It's a trade. It's a big bet that cloud computing growth, CapEx is going to continue. Much more than people thought. Well, you're getting the signals. I think it's obvious, but by Meta, MU, and CIL. Thoughts on possible privatization? I don't think it's going to happen. The political will doesn't exist. But if it does happen, oh my gosh, do you consider Pepsi a good value? I think there's other things that are better value. There's a debate to be had, and I love this debate we had in Capital Mindset Club around staples. Basically, it's like a question: do you think that maybe the valuation was just wrong before and it's now correcting? Could be that's the case. I don't know. Retently thoughts on Safe. Safe, be very careful. Safe is a hyper leveraged exposure to long-term rates. They have 99-year leases, so you're basically buying hyper leveraged TLT with this. But other rates, not so much. But they're going to be more tied to the 10-year. This is going to be more tied to the 30-year. But it's even more leveraged. A DCF can be used for anything as long as you're doing the inputs correctly. So a DCF is not, it often is used as a crutch that people use to justify any price. So the DCF is a very small portion of the battle. Most of the battle is in your own analysis. How accurate are you getting the forward predictions right on the business? Thoughts on CRM? Love CRM. There's a lot of products they have. CRM I'm getting lucky with because I literally thought I was going to get called away on my shares because I do sell CCs on CRM stock. So there's probably no way now I get called away. It's impossible. We have to get to like $360 a share very soon. So they're expiring worthless. At one point I was worried and I'd have to pay taxes. But no, love CRM. Think they're a great company. They were a great opportunity when everyone was forgetting that they can produce cash flow whenever they want. What about Melly? I think Melly's expensive. Too late to buy TSM? No. If you think the CapEx cycle is still going, TSM and NVIDIA still have more room to run. And then TSM is shielded from the risk of the ASIC or custom silicons, but they have the risk of China invasion. So you have to worry about that. There's ways to hedge it, though. No, Uber is not a core position. Good question. No, Uber is not a core position. Sorry, actually, I'll ask you this. Can you define core position? Everyone has a different definition. So if you give me the parameters of what you define core position, I'll answer yes or no following those parameters. Because some people argue a much smaller allocation is a core position. Others argue a larger allocation is a core position. But you can tell by my initial response, like how I think of it. But maybe I would like, a parameter for that. What's your target price? I don't have a target price for NVIDIA because I have no idea how high this thing goes. I dislike target prices. Although I do dabble in terms of kind of figuring out what price I want an exit. But I typically formulate buy prices and then I go from there. And so I find prices that I'm willing to pay for an asset. Okay, so if that's your parameter, no. Well, that's not the original person who asked the question, but by that parameter, it is not. It is not a core position. Stay on for market close. What would make this an epic live stream? I have a lot of things to do, but let me see. Let me check on something and I'll see. That's a long time. That's 2 hours from now. Thoughts on Lyft? Say its value relative to Uber is beaten down. Yeah, but Lyft on free cash flow, it's a little bit misleading. They have so much SBC in there. You're just buying the second rate player. And I think Lyft is probably a acquisition target. If anything, if someone wants to buy something and then just improve it, get some synergies, etc. So I don't know. I'm not interested in Lyft. I'd rather just buy Uber or Grab. Bobo says this. I'm getting added. I think, is there an emergency happening? Yep. All right, let's see. Let's come back here. Thought you Chinese TV to analyze stocks? No. I mean, at your own risk. Oh, okay. Yeah. You see, that's a much better clarification. So, I could see myself holding Uber long term, but it's mainly predicated on the valuation got too cheap. What? I have $700 covered calls on Meta that I can't get out of. Help. When do they expire? And man, that sucks. Well, I gotta say, $700 per share for Meta is not the worst thing in the world. You're falling upwards. Energy companies. I assume you're talking about oil companies. Probably. There's a few. There's some foreign ones. I'll give you some foreign energy companies. So on my radar, there's PetroTal. Caution on that one on liquidity, but they're very cheap. They're in Latin America, traded on the Canadian Stock Exchange, but headquartered in Texas. Very confusing, I know. There's also the offshore drillers, Valero. There's also Repsol in Spain. So those are some of the foreign ones. CNQ for high quality in Canada. I was hoping for some weakness there, but there wasn't any. But yeah, CNQ, great management team. Natural gas, you have Tourmaline. You also have BSM, which is a MLP. So unfortunately for foreign investors, I'm sorry, but BSM. You also have, for capital allocation, if you're preferring a buyback strategy, MPC is pretty hefty on buybacks. Yeah, I'll go with that selection so far. Opinion on Crocs. It's cheap. Expires. Oh no, January 2026. Rob. Only the stock gods can help you, my friend. Honestly. Yeah. Only the stock gods can help you, because you either take the L or you hope and pray. When I say take the L, it means you buy them back. I kind of think that you sold them last year, I assume. And you saw the premium, you're like, this is juicy. Wow. I'm sorry that's you're in that situation. I mean, we could get a mass market pullback. I don't know. Meta could be flat. I don't know. But they've blown it out of the water. And then, you get the advice, oh, buy it back, and you buy it back, and then you end up, it would have been expired worthless. That would suck. So 2026 is all right. Anyways, I'm sorry you're in that situation. Seems difficult. I disagree. I think that people's valuation methodologies just are a bit different. Off the top of my head, I can kind of throw off some buy prices. Like Meta, I think is a good buy if it gets to like when I did my recent valuation, which was over the weekend, 580. Like we were just there, and I've been averaging up on Meta, so I have no qualms about that. That mentality I've killed, thankfully. So averaging up, not an issue for me. Alphabet seems like it's a decent value even here, but I think it could get better. We'll see. And Amazon for a while, it's kind of exited that opportunity, but for a while was great. Tech wise, again, coming back. CRM exited, ServiceNow exited, Atlassian was there. Yeah, so we're talking about in the now. Yeah, valuations have come up a bit on some of those. Even the vertical market software solutions have also rallied like 20% from the recent low, but they were just there. You just had an opportunity. New CEO from Zillow. I don't like Match Group because the product is designed to not be used if you're doing a good product. So if you're making a good product, you're designing it to not be used in the future. All right, so we have 284 viewers right now. Like, subscribe, or retweet it. Let me know what your thoughts are afterwards if you want to comment, and that helps out the channel. Okay, 700 last year would be at the money. The premiums weren't even that much. Yeah. So my average basis in my personal holdings is like close to $100 a share at this point. In the holding co that I update in Capital Mindset, that one I believe has gone up as I've averaged up heavily, just because the portfolio was smaller before, and then it's grown as I've averaged into it and contributed to it. But I believe that one's been like low 200s now after the ads I did in the 500s. So, and then if I do I won't do a weighted average because then people could be able to tell like my total net worth, but it would be somewhere in between those two figures. What is your strategy in finding options to sell? I have a very crude method, if I'm being honest. Not as very calculating. There's a component of vibe checking. So not the answer you're looking for. But I try not to be too greedy. What I attempt to do is go as far out in the money where it still makes sense, and it's worth it. And that honestly depends, right? What I define as worth it. So I focus on, and this is, well, I don't know a better way to say this, so it's going to sound bad, but this is a problem that gets fixed with more money. Because I think when you have a smaller portfolio, it's very easy for you to get greedy. The reason why is because you're also thinking about the nominal side, the nominal return, instead of the percent return. Because the nominal return, let's say you have, let's define what a lot of money is. We're talking, so if you have $100,000 portfolio and you have maybe like, I don't know, $20,000 in Meta or $30,000 in Meta. Well, actually you need about, right now for 100 shares, you need 60,000. Oh, sorry, 70,000. Just the other week was 6,000, but now 70,000. So you have $70,000 in Meta. So it's a lot of Meta. But with one contract, you may not get a lot of nominal if you go too far out the money. And so that makes us want to go closer to at the money, and it increases our risk of getting called away. As your portfolio grows a lot, I think mentally, psychologically, the one advantage you start to get is like, let's say now you have millions in Meta. Well, now you can go farther out the money, and it's still actually like, I mean, you can feel it. It could be like even not a mortgage payment, but maybe like a card payment or something like that. So like normally you're not gonna be maybe as disappointed with going too far out the money. Because the goal, if your intended goal is to keep the shares and keep the premium, you're going to want to try to mitigate the risk of getting called away. So further out the money. And then that problem of nominal return being too low is fixed with quantity. And then when you actually do the annualized rate of return, some of these are not bad. I think if you're trying to be too greedy about that return and starting to go into like the 20, 30, 40% annualized returns, you're obviously not getting a free lunch there. But if you're going for the lower percent returns because you're taking on a lower risk of that outcome. Oh, can you explain getting called away? So if the price goes above, so for example, I have the 800 strike. Oh, and also we didn't talk about time duration. You do want to also go shorter in time duration than longer term time duration. So you get that nice theta decay kicking in towards the last 30 days. It really starts to kick in. So if you sell a little bit out from 1 month from now, you'll really start to get that effect in there. But like, let's do an example. I have the 800 strike for Meta expiring very soon. So likelihood it gets there is frankly quite low. It'd have to do something crazy in the next couple days. But at 800, getting called away would imply, let's say we get to $805, I would lose all my Meta shares that I have, covered under the contracts. I would be selling it to someone at $800 a share. So that's what we mean when we say called away. Trump proposing to cut carried interest tax deductions, LOL, PE dumping. Oh, okay. So I got to make some buys. What's a holding co? No, the holding co is the portfolio that I started with Capital Mindset. So the whole intent and purpose was when I started Capital Mindset, when I started the club, that I will do like a refresh portfolio. So we won't have any of the legacy positions. I'll have to do it all over again from scratch. So I created what's known as the holding co. That's just a name and namesake. And so in the Capital Mindset Club, I update the holding co, which is a portfolio, real money portfolio. It's not the paper portfolio that people do, a real money portfolio. And then basically I share the brokerage there. And I contribute capital to it every single month. And then we kind of figure out what we're going to do, what we're going to allocate the capital to. Well, I say me. The members don't have a say. We discuss things, the members and I, but I'm making all the portfolio decisions. And that's the whole point of the club, is like we share ideas. So some pitches come from me, some pitches come from someone else, and then we go back and forth on them. So the holding co, when I reference it, it's just the portfolio that started since Capital Mindset. And so its performance is reflective of all of my thoughts and ideas since starting Capital Mindset. And it matches in many ways always the thematic, because I don't change themes depending on portfolio. They're all relatively the same, but it doesn't have any legacy positions. So any positions I've held since before Capital Mindset, because it's brand new, it was a virgin portfolio. So that was started in 2021. Okay, so wow, so we might have a buying opportunity right now. Let me see what's happening. Oh, that's not a dump, Andrew. Andrew literally got me so, because his stock is dumping. I'm kidding. We have a playful rivalry between our two private equity stocks. We have a very playful rivalry, but Andrew, just because yours is dumping doesn't mean mine is dumping. I just checked mine. Go check mine. Playful rivalry. KKR is overpowered. I just want to clarify it. I do not hang myself on the belief that KKR sucks. KKR does not suck. I won't disclose nominally, but by percent, the holding co has made more, but has had more volatility. At least last year had more volatility. Last year, the personal had less volatility, and made, because the thing is, when I look at and when I post the performance for the personal holdings, I'm also including cash. So that does actually have an expressed impact on volatility. And for disclosure, like I don't use savings accounts. I just use products like JAAA, SGov, stuff like that. So I put my savings into the brokerage account and then just shove it into these instruments. And well, I have different accounts, but when you do like the performance, you do all accounts, as you should. You should put all accounts, and then you can see everything. While in the holding co, there's no cash component, so that attributes to that. But the higher return definitely in the holding co percentage wise. Nominal, I won't speak on that, but they're both significant. They're material. So the holding co right now, I can say what the size is. People care about size, pun intended. Is sitting at close to 1.8, 1.9. Well, no, including options, it's around 2 million. We want a hateful rivalry. All right, Andrew, you suck. I'm kidding, by the way. Dramatic pause. Do you think it's unfair that international investors don't have to pay capital gains tax? Yeah, it's unfair, but also, you know what? It's a behavioral mechanism too. It helps us not sell. Oh yeah, that is also for context. So yeah, what Dex is saying, to add to the question, yeah, when Dex joined, and Dex is an older member for sure. He's an OG. Yeah, the holding co was not that large back then. Bobby's still going. It's because people keep asking questions, and I love answering questions. So people feed me. But yeah, I think like having a capital gains tax does help us with some behavioral components, because like I do questions at times like, oh, do I really want to sell that and pay tax on it? Why don't I just hold it? Because then I have to do the calculation of like, okay, I do that minus, the capital gains tax that I pay, and be like, do I want to sell at that price? Probably not. So no, I'll hold it. So in some ways it's good, some ways it's bad. Or you can just move to Puerto Rico and eventually you'll get that benefit too and still be in the United States. Do people actually use a brokerage account separately for a savings account? I think you should. Because you can go to your broker, open multiple accounts, right? So you don't have to put your savings into the same brokerage account where you're, buying and selling stocks. You can have a separate brokerage account in their same broker, and then title it or name it savings. Or if you really want separation, go to another broker, because these products are available in all of them. Like you can have your main broker in Fidelity, go to Schwab, Merrill, whatever really, and then just shove your savings into there, and you buy, treasuries. You buy SGov, you buy any of that stuff. I think so, Rob. This might be one of the most watched live streams. We've been getting up there. So Capital Mindset, I was very surprised, because I did a big hiatus because work was crazy. And I thought, the algorithm's going to kill us. No, the algorithm was actually fairly kind to us. I think we're growing the audience. We're growing the base of Capital Mindset viewers a lot, and I have fun doing it. Love actually getting on here and talking with you guys. If you have to pick one company over 50 billion market cap. Oh, let me remind everyone, since new people are joining all the time. If you go into the club down there in the description, do not use the Stripe one. Please use the PayPal link. The Stripe one will cause issues. I will be giving an announcement later today to everyone, because Stripe did a oopsie. Okay, so Stripe did a bad thing, but the PayPal one will work. Stripe will not work. I just wanted to remind everyone, just in case. I should add like a disclaimer in text, but do not use the Stripe one if you're trying to. PayPal is winning in this case because Stripe did something bad. So, spouse scammed me using Stripe. No, it's really frustrating. I have to get on a call with a rep now, because they did something very bad, and it's not a good thing for their business to do that. But I'll update all the members on it. Okay, so what % of your entire equity portfolio is ETFs? I am the insane person with 0. No, that's not true. I have a health savings account. The health savings account is 100% indexed, and it's because the product availability is just S&P 500. So I don't really overcomplicate it. So I have a health savings account, and that is, I won't say the percentage because again, that gives, details someone could calculate net worth, but it's not a big amount. But effectively, it's I'm basically like 100% individual stocks. So I'm the only one. The other analysts of Capital Mindset have all a majority of their investable net worth in ETFs, with a portion or significant portion, like in terms of dollar figures, is not nothing, in investing into individual stocks. So basically, effectively, it's their retirement accounts that are indexed, and then, which I think is a smart move, by the way. I'm just the tard that's not doing that, and their individual investing, their taxable accounts are individual stocks. So, but a good question, not Joe Kick. All right, this is just for fun. I want to say 140. I don't think it gets to 140. Is it an ego thing to not have an ETF? I mean, I don't know if you're joking or not. I didn't know it was an ego thing to not have a single ETF. You have a buy price. You have to buy at today price. You can just buy one stock and you need to keep it for 5 years. What do you pick up? Oh, that's a good question. I'll do something I have a very small allocation to. There's other stocks I probably would pick, but I want to be fun and not pick them. It is a company I have a long-term positive view on. Progressive, PGR, ticker symbol PGR. I think you're getting a fair price, phenomenal company, and you're going to get lots of consolidation in PNC in the future, with the advantages only growing for Progressive versus other PNCs. I am not retired. Not yet. Soon. Potentially. We'll see how things go. But Geico has been bleeding customers. Yep. You probably drive stick. No, I don't. I'm actually the only one in my friend group that doesn't drive stick. I'm the odd one out, genuinely. So if we go on drives together, and they like to do that. They're more gearheads than me. I have a car that I got inspired by their likeness, their liking. So we sort of like have our different flavors of cars. But I'm the only one who doesn't drive stick. I drive automatic. Well, it's the fanboys will say PDK is the best automatic out there, but it is automatic. It's not stick. And the other stuff, never eat prepackaged meals. I do not. That part is true. Do your own no, that's not true. I have a dentist. Tailor your own clothes. I wish. You think too highly of me. There's only one of those that I fit. You think too highly of me. I do not eat prepackaged meals. I avoid that. Which U.S. state do you like the most? I like Texas. I like Florida. I like California's weather. I like New York to visit. I like Montana. Never been to Alaska. Hawaii, beautiful. Not sure about living there, but very beautiful. You get island syndrome if you live there, probably. Virginia, I like Virginia. Mainly in Fairfax County, if you know where that is, but Fairfax County, Virginia. North Carolina, beautiful. Parts of Georgia, also very beautiful. So my favorite, that's really tough. All those are like different flavors. That's tough. His favorite state is Puerto Rico. That's my favorite place. My dream place. Okay, so whoa, 100% in stocks. You remember the worst run you've have in investing? What were your emotions when all your stocks were down? Did you think they were ever going to recover? Or confident? Probably like the time that okay, because if you've been following Capital Mindset, 2022 we had a positive year, so it's like not the I didn't have that feeling, but I know what you're trying to get at. You're trying to get at something like March of 2020. That was I was down on quite a few of the positions. I had a very bad hedge. Looking back, it was an okay hedge, but it was a ticker symbol GOVT. I was we all learn, but the best one would have been TLT for the same kind of thought process. But not SGOV. No, sorry, SGOV is not the one. It was GOVT. That's the one. So GOVT is like more of a mixed portfolio. SGOV is the short-term one. So don't confuse those. SGOV is the short-term. GOVT is like the mixed one, and TLT is the long-term one. Then TLT actually did really well. There were some people out there who's like they actually shorted the market or whatever, but nothing so insane. But a lot of the long ideas were down quite a bit. But the thing is, it was almost like a fake out because we rallied very quickly after that. So what I felt at the time, I was pretty confident. I even like wrote articles on LinkedIn back in those days. I didn't make content on YouTube. I wrote articles on LinkedIn saying this is a buy the dip opportunity. I didn't make YouTube videos, but it would have been fun to start then because I would have said what I was feeling on what I wrote on LinkedIn. It's buying a dip opportunity. So I was fairly confident in the businesses I owned. Didn't think that they were going to die anytime soon. And then 2018, there was like that little quick spurt to the beginning of that like trade war, the first trade war with China, kind of the same thing. I never lived through 2008. I wasn't investing in 2008. Like that was different. So I don't know what I would have felt then. That was a mind-blowing crisis. I don't know if I would have been feeling the same way because 2020 was very different. Maybe some people say it was just as scary. I don't know because I haven't lived both ways. I only hear what people say, right? The people who did live it. So yeah, I had fairly strong conviction. Favorite state is Canada, soon to be. Okay, so you were forced to sell all of your positions to hold only one stock besides ETFs. What would it be? Good clarification right there, because you said besides ETFs, so I can't pick ETFs. You're smart. That's exactly what I would do if I was forced to hold one for the rest of my life. I'd just buy an ETF, because individual stock picking, if you can't sell it, then you're in a problem because everything can happen. I see what you're getting at there. Something that is almost like indisruptible. Now I'm gonna have to sacrifice valuation now because you're putting me in a position where I'm focused more so on preservation of capital. It'd have to be a waste management company, believe it or not. Something that's irreplaceable. I don't know what the returns are going to be. Okay, mind you, I have no idea what the returns are going to be. But if I'm going to have to buy something with like almost insurmountable moats and a runway that I can see forever, and I don't have to worry about, really, in fact, technological advances can help me, but the moats won't be demolished by those technological advances. In fact, the moats get higher. It'd be a waste management company, Waste Connections, Waste Management, or Republic Services Group. No, genuinely, like that's what I pick. Like under this criteria, if you were forced to sell all your positions, hold one. If it was for the rest of my life, that's frankly what I'd do. I have no idea if I'd outperform, underperform, but in that scenario, I think I'd come out pretty okay. Because like Amazon, there are scenarios, and you see like in this criteria, I can't sell it. There are scenarios where Amazon can get disrupted, right? And if I can't sell it, I'm screwed. Apple, anything. The likelihood on those low, but if I'm really trying to consider that as an actual risk, a tail end risk, I'm more confident like Waste Management holding its moat and how insurmountable that moat is than Apple, Amazon, blah blah blah. Great and very low likelihood of that happening. Great companies. I think they have better return profiles, but Waste Management for sure is like no one's coming after them. It's not happening. Yeah. Again, keep in mind that's within the framework I was provided. That's what I'd have to do. I mean, it's kind of like what Bill Gates does. Look at Bill Gates' portfolio. I think he's still a huge allocation to waste management because that's his mindset. He's looking at capital preservation. He's like, I have all the money a guy could ever want, ever, and then some for lifetimes. What do I want to do? I want to preserve wealth. And so what's a great company? Obviously, he knows waste management. The guy managing his money knows that waste management is not the best performing stock ever. But he's not focused on that. He's focused on low vol returns up and to the right, something that won't have permanent loss of capital, and then everything kind of takes care of the rest. Maybe he gets lower returns, but in the end, it should be fine. Yeah, he owns Waste Management. Yeah, and CP. Yeah, so like you can see the mentality, right? Hi, Fabio. Thoughts on REITs? REITs are going to be tied to the 10-year more than anything. So you're going to have to, if you're looking for like that more instant gratification, that instant return, pay attention to like to the 10-year, what's that doing. But I like them. I think they're attractive. I don't think REITs are dead. There are other tax efficient entities out there that give you exposure to real estate. I've talked about Bridge Investment Group, ticker symbol BRDG. It's a private equity firm that does real estate. So it's like a leverage play on real estate. I expressed earlier when someone asked about SAFE. SAFE is like a bond proxy. It's like a leveraged long-term bond proxy. So you do want to be careful. And that when you're going to have to be even more worried about where rates go. And remember, the Fed controls the short end of the curve, not the long end of the curve. So, but REITs do look attractive here. I've talked about KRC, ARE, SUI, Realty Income, Agree Realty, Camden Property, Mid-America, American Homes for Rent. The apartment ones are kind of getting out of the super juicy side because the market's more positive on them. American Homes for Rent, also market was never really pessimistic on them. SUI has some doubts on their growth. KRC office ugly, and ARE medical office uglier right now. But they have the campus strategy that might work out. Realty Income, kind of same old growth questions. Too big for their own good, diversifying too much. ADC, S tier management, focus strategy, land lease strategy as well. So that one's a very high quality. Essential Properties Trust, another one, good strategy, etc. NNN gives you a different flavor, higher usage of equity, debt rather than equity. They have a higher hurdle rate for using equity, so less dilution if you're into that. You do have the Canadian flavor, Main Street Capital Corporation. Main Street Capital is focused on apartments and specialty fixer-uppers in Canada. So you do have to worry about, the Canadian housing market for that one. Anything else off the top of my head? No, there's like the government ones, but that's more questionable. Okay, thoughts on car insurance coming? You mentioned PGR earlier. I like PNC, but Progressive is going to kill them all. Not kill them all, but it's going to consolidate a lot more than people think. Market is dumping. This could be the greatest live you've ever done. All right, what's dumping? Let me see. Oh my gosh, we are dead, guys. It's over. What does that move? That's hilarious. Let me refresh. Let me log into my broker. See if we're dumping too. Are we dumping or are we producing alpha? Yeah, I know it's not dumping, but okay, portfolio is not dumping. We're still up today. We're not up as much as we were before, but let's see what's kind of going on. So Meta, Amazon still up, TSM still up. Oh, this is going to work out. Oh, okay. So Google's positive now? Was there a comment? Like, anyways, thoughts on Elf and Walmart? I think Elf is interesting. Walmart's too expensive. Uber's at 70. What are you talking about? Markets are efficient, bro. Markets are efficient. Wow, what a reversal. That's hilarious. All the negative comments on FinTwit, all culminating into nothing. Most still green. Numbers a little lower than 30 minutes ago. Yeah. So what? Marry, date, or kill? Amazon, Meta, or Google? Marry Google, date Meta, marry Amazon. Oh, sorry. Kill Google, marry Amazon, and date Meta. Yeah. Ooh-bah. Markets are edging. Submit a buy order live. I don't really have cash right now in this account, so let me see. Holding co. Yeah, we have like a joke amount of cash, honestly. What's NVIDIA at? I wanted to buy more contracts. Okay, so we're up 2%. Okay, is this dump like going away? Because now some stuff is picking back up. I don't know. Yeah, it's just market noise. It's whatever. I didn't even see this. This is getting interesting. One of my banks is reporting, and they're rallying before the report. I don't know what that setup is. I'm not doing anything with it. What is that setup? My insurance co. Man, if you stay like this for one more week, I'm going to be happy. Dude, markets are efficient. Ryan, this is something you should learn. Ingrain it in your head. Markets are perfectly efficient. What's my SSN? 567-377-7785. Just gave someone's SS out there. It's over. Are you in Uber, Fabio? Yes. Yeah, I'm in Uber. I have a synthetic position on Uber. Talked about in the last live stream. Fake fan. You didn't watch it. Fake fan. I'm kidding. Fabio's stream is crashing the markets. SEC will be calling. Well, we're at 300 viewers, and so now I think we've hit a new milestone for viewerships on live streams. So if you guys are watching this on Twitter, feel free to heart it, retweet it, share it with whoever you'd like to. If you're on YouTube, like, share, subscribe. So if I was crashing the market, SEC will be calling. I basically just Twitter. So you can follow me on Twitter for sure. I tweet funny things, serious things, everything in between. I like to have fun on Twitter. Pinterest reporting after hours. You think it will cigar butt? Oh, dude, I'm no opinion on Pinterest. No opinion on Pinterest, Reddit, or anything like that. MPW squeeze in favor. You will call me a genius. I will make my son Stabulo call you a genius, and I will call you a genius. Peter. Have you looked into CLBT? Sounds familiar. I'm gonna say I'm not in present moment able to tell you an opinion, because if I'm saying sounds familiar, that means I need a refresher. but the ticker sounds familiar. I'm going to pull up the ticker here. Celebrate. Oh, yes, I know this one. This is that legal software intelligence company that's SPAC'd and actually was a huge winner. What are they doing? Oh my God, they just keep winning. Oh my gosh. So no opinion on pricing. I have no opinion on valuation, but so I apologize for that, but eventually I might have an opinion on it. Wait, hold on. I got to put James' comment up here. MPW for Stabulo. Thoughts on applied materials and Lam research. Okay, so quick thing about applied research and I mixed the names. Wow, applied materials, applied research, applied materials, and Lam research. They are in a different capex cycle than the likes of TSM. So TSM is exposed obviously to the end market consumer who consumes the silicon, but the equipment is going to be exposed to the consumption of TSM, Intel, Samsung. So the I think for the most part, how we pitched it is they are in a down cycle for a lot of their other servicing. So what I mean by that is like a lot of the other silicon, that lower grade silicon, less advanced silicon, there's not as much of an upgrade cycle that's been in a down market, and that has affected the equipment companies. Lam Research exposed more to memory. There's more and more memory needed. Micron, Samsung, and why am I forgetting the other Korean company? SK Hynix. They are investing more in greater capacity. So Lam should do well. Applied should still do well because capex is still kicking. It's picking back up, but that they lagged the likes of TSM just because they're on a different cycle than TSM. And then same thing with ASML. You didn't ask about them, or KLA. So KLA in metrology is the leader, followed by what's that company in Israel called? There's another metrology company. Someone will type the ticker probably in chat. And then don't forget Tokyo Electron. So, but all of those, they should, I think, do well in 2025. I think everyone's expecting demand to pick back up, the capex to continue for capacity increases in the various end markets. So I like them. Long story short. Oh, you guys are coming out with good questions. You guys are never going to let me end this live. Just question after question after question. I was like, oh, I'm going to come on here for a little bit, and I'm here 2 hours. I'm having fun. Most overrated super investor go, Monish Berbrai. Not even a question. Monish Berbrai. Oh, well, actually, more recently, I guess, Seth Klarman, also very overrated. Well, I'm going to be fair to him. His original strategy that was his claim to fame was a strategy that worked under a smaller sized fund. That is a problem, right? Because size of a fund matters for what you're going for. Some funds elect to keep the fund size at a certain level because they know that the performance suffers as they grow too much. So success can become their enemy. Their success can kill their success. Seth Klarman, I will defend him just there and not be too harsh, even though his performance has been absolute piss over the last like 10 years. Ray Dalio's. You know what, Monish, I'm going to take that back. You know why I'm going to take that back? Because Monish is a nice guy. So because Monish is a nice guy, I'll take it back. And he's willing to talk and foster discussions, go to universities. So he does a lot of good. I'm going to put Ray Dalio in his place. Ray Dalio is overrated. So I don't even know why he's considered a super investor, but he's overrated. I'll redact Monish. Monish is a nice guy. I didn't even know this. I did not know he blocks everyone on Twitter. That's hilarious. You guys are naming some other ones that could also be on there. Andrew is just a hater today. Mods, block him. Chamath. I didn't even know Chamath was a super investor. Investing in China is like playing roulette. Yes, as we discussed earlier. Yeah, I don't. Yep. You question him at all? He blocks you? I had no idea. I've never interacted with Monish. As you can tell, I don't really I want to be nice, but I respectfully don't I respectfully don't derive a ton of actionable value from his arguments. He provides a fair philosophical framework for investing, but not a lot of tangibility for my strategy. When can we invest in your fund? This year. No idea on the timing, but this year. Low key, a pump and dumper. Oh yeah, the king of SPACs. The king of SPACs. Yes, I remember the FUD. It was hilarious, but arguably he gave us one of the greatest opportunities in a long time. Guy Spears and Indexer at this point. Yeah, you guys are all, wow. You see, one question just sparked a whole slew of comments going like this guy, this guy, this guy, this guy. Andrew, of course, we've already had this conversation. And then you're gonna get the title, God Emperor Short PM. God Emperor Short Portfolio Manager. Very, very expensive for the size needing to be very large. If there's a lot of interest, like a lot of interest, could be worth it. Otherwise, and there's a huge advantage to the ETF, right? There's the tax advantages, which I would love. I would literally throw all my money into this ETF and then just invest via the ETF. But that doesn't make sense just by that reason, because there is the maintenance costs associated with having an ETF. So you just gotta be aware of that. But the tax advantages in theory are amazing. If you have like a redonkulous sum of money, making an ETF can make sense. And if you believe in yourself, and if you do good. Short book SAR. Actually, you know what? That's your name. You remember Kevin O'Reilly? I hate that guy when on TV during Meta was like in the gutter $80 and said never going to recover. Yeah, no, there was a whole insanity bubble around it. Like this whole mind shift on Meta. Ross Gerber is not an investor. He's a grifter. I agree. I have very bad opinions on Ross Gerber. Very poor opinions on Ross Gerber. Which strategy fund? No. I mean, why would it? Why would it change from what I believe works? That would make no sense for me to do that. But what I am discussing is more so exploring, and I have a call with someone actually at 4 o'clock on potentially this very topic. So we'll see. Amazon will save the market. It will save the market. Bobby will be putting, yeah, I'm going to put everyone into VT and collect a fee on that. I'm going to collect not 2 and 20. I'll drop the 20 and just keep the 2 because there's no way we're getting the 20. So I'm joking. That's a joke for VT lovers. It's a joke. NVIDIA in 2030 remain flat. 2 trillion. Doubt that in the short term. I don't know about the longer term. Julius Terry says Buffett partnership fee structure is misaligned interest, yet he skims 1% off the top just for breathing. Oh my gosh, yeah. Unfortunately, no opinions on them. I actually I don't even remember these companies. Yeah, so I can't provide an opinion. Never looked into them. This is what Ben. Okay, so not to start stuff or anything. No, I like Ben Felix. Very academic. Respect his profession. Respect everything he does. I would not put my capital into that. Again, very academic. So very good at discussing theory and going over research papers and the like. All well and good, and actually does provide value in that way. And then from an investing standpoint, I mean, I don't view I view them as actually they do provide a service that is meaningful, encouragement, vocal encouragement, making sure you make the right decisions. There's value to having someone, to talk to. And then they're producing these strategies for you that match your specific needs. Like that's, of course, there is a value to some people. But like, it's just not, it doesn't align with me. Doesn't align with me. So I wouldn't invest my own money that way, but 1 hour to market close, you can do it. You guys really want me to. Well, if I stay quiet, it's because I'm thinking about doing a trade here. I think the market's giving me a chance to add to something. Okay, I might do it. Okay, that's weird. Okay, so where can I gather? Dude, Uber calls are up a ton. Is Uber hitting over 70 now? No, it came back down, but damn, that run is insane. Sorry guys, it's hard to focus back and forth, so I might not even be able to do a trade. I don't want to do one without thinking. Do you sometimes feel like having a mindset gives you ADHD? I give you ADHD? Oh, damn. Short ELF before earnings. Life savings ELF before earnings. Do it. Microsoft at these levels all in. Oh my gosh. Market tanking, SPY down 0.04%. What we buying? No, I already planned on adding to some contracts. So I was debating if I do that now or I wait for tomorrow. Because I don't know, we might get a solid. I won't bury the lead. The company I'm thinking about right now is Nvidia. I can add into it now or wait till tomorrow. I'll wait. Hopefully don't regret it. The time to buy was last week when AIDC got clapped. Now it's whatever. Yes. So those of you who bought and we tweeted and did live streams about it, yes, you had 2 fantastic opportunities. But I still think, Andrew, there is still opportunity in some of them. AI is done. Well, I bought it already, but I'm adding to it. A Koje. Yeah, we won't do anything today. We'll just sit. Well, there is ELF after hours. Man, do I add to ELF? I only have like an hour to decide this, and it's hard to live stream and think on at the same time. Fund only for U.S. citizens. I'm trying to organize it where it can be international. Shut up and take my money. Buy more ELF. Yeah, we'll see what happens with earnings tonight. There's actually that after hours is going to be wild for me. There's so much going on after hours. I have capital on the sidelines waiting for Amazon in case I can pull for my savings and then just redeploy it back into savings. Why do you think it's going long on Nvidia now at 3 trillion is kind of pointless? There's some form better with less risk over the long term. No, okay, so I'll explain the full thought process there. So I'm viewing Nvidia as a trade, not as an investment. As far as sizing goes, it's not very big. To be frank, it's not very big, but I'm playing it as a trade with the understanding that CapEx is going to accelerate. And the way I'm playing it is options. So I have 2 legs. I have the puts and the calls. Both of them are longer term. They're around the same expiration. In fact, let me actually refresh what the expirations are. So I have it in front of me. So lies. They're different expirations. So the puts expire in December of this year, And then the calls are leaps. You get no tax benefit on puts, by the way, when you sell them. The premium, there's no tax benefit. So there's no point in doing long-term or short-term. Fun fact, that comment is only for American investors. I don't know about your country. So disregard that comment if you're not in the United States. So I have a leg that's a few contracts selling puts on NVIDIA for December. And those were at the money at the time I did them. Now they're out of the money. And then I have calls or leaps that are in the money. It gave me a break even as forming the synthetic position roughly below where we were earlier this week. So my break even's like in the low 100s. So like I think it was like 109 or something like that. And it was a net credit technically. And then we use the premium, you swap it in, you buy the leaps. And I was thinking about what I'm thinking about doing is just adding to that position here. We're kind of buying into strength. The position's already up, not a ton, but it's up a decent amount because NVIDIA's been running since I guess the narratives died out a little bit from both DeepSeek last year and then this whole tariff debacle. So I know that, there's probably better opportunities, and I'm not buying commons for NVIDIA, but I'm just viewing it simply as a trade. I could be out of it tomorrow. So whatever I'm saying now, don't take it as like next week. I might not be holding this. I might be out. But I view it as like, I kind of want to see Amazon report, NVIDIA reports at the end. I remain adamant. What I said in the last live stream, you will not hear the CapEx cycle death from NVIDIA. They won't tell you. TSM won't tell you. The signals are going to come from your hyperscalers. And so, listening to them, the signal's not there. So full steam ahead. And then we'll see if this trade works out. If the trade doesn't work out, I don't think I'm also, positioned to lose a lot. So. Yeah. Okay. I get your logic NVIDIA trade. I can see short-term gain, but the long-term and the valuation is going mad risk to reward. Yeah. I think like it has more juice to squeeze over this year. I think it got like forgotten a little bit, and there's going to be a last like good amount of excitement is what I'm betting on. I'm more comfortable with holding TSM. I think TSM, defeats the ASIC apocalypse. So off the shelf silicon might not be, the long-term goal for a lot of these hyperscalers. And so TSM will win in either case. So I'm more comfortable holding TSM commons. And I have covered calls on TSM that are fairly aggressive out the money and are probably unlikely to get exercised, but because sometimes you also get pretty good premiums on TSM. I guess I can talk. Okay, you know what? Because I know Fiscal Philosophy, who I've collaborated with, on High Tide and stuff. He, Stabulo, who's a club member, he shared this capital mindset pitch that originates from Andrew. So I'm taking zero credit for this. Andrew's in the chat. So Andrew found this amazing company and pitched it to everyone. People basically organized it, and then there's already, I guess, public content of this, so I don't feel bad talking about it here. It doesn't seem like an issue. So it's a company I have, for full disclosure, a position in. I have contracts, legs in the put side, the call side. It's really actually kind of complicated, but it works for me. Some people like to just use comments. So this is TSSI. What they are is, you can think of them in an elevator pitch that I'll explain. They're an SMCI, but a miniature version of them, without the scandals that are present currently with SMCI. So, and also, I think Alexandra is telling me to say this because we do a competition, a friendly competition inside the club that the members actually set up themselves. And I know that this is his pick for this year, so he's basically trying to get me to talk about it. But they're down 6% now. Very volatile, high retail involvement. So I got to warn everyone that this has been a very volatile story. You can kind of see the ups and downs. This was the uplisting event. So they got uplisted to the NASDAQ, and then it proceeded to crash. This was the amazing opportunity right there. But yeah, since then, still also pretty volatile. And what you can kind of expect from them is if you can continue to see strong demand for CapEx for data centers, TSSI should continue to just do well, very well over that period of time. They're hyper leveraged to Dell. So Dell is a massive customer for TSSI. They actually are close to 90 some odd percent of the sales that are immediately exited out for a lot of people, because there's very wise advice saying do not invest in companies that have 90% or more of their sales from one customer. TSSI is among them. So just want to emphasize the risks. The reward is there, but the risks are definitely there. So you really want to pay attention to that. And then they're probably one of the first to die if the CapEx cycle does die. So for the time being, there's investments they've made in new facilities for increased capacity. They are located strategically in Texas, where there's a lot of DC build out. And so they are right next to a lot of their customer base. There are rumors that they might have a new customer coming online soon. That would be a very bullish catalyst for the stock. Management's been very hesitant to talk about it, and good on them. I may or may not reach out to management to do a public live stream and talk to them, especially since I've just discussed it publicly. This is the first time we are talking about this company publicly. We've only talked about this company within the club. But hey, I feel like there's already plenty of people talking about this publicly now, or there's at least a few that I know of. So if I end up doing that, that should be an exciting episode. I'll let everyone know in advance if there's any questions. Obviously, it has to be public, because you can't have an interview with management like that privately. So it would be a public event. People can come on, ask questions in the chat, or I can get questions ahead of time and then ask them. And I'll be willing to do that for everyone. I won't say it's a CEO, but it could be the CFO or the COO that we can get on. So could be interesting. Yes, it is a 50x. It's done very, very, very well. There are no leaps present, so I have shorter dated options contracts. And again, my position is actually fairly complex. I have many legs on the puts, many legs on the calls, and then I have also sold calls. So I have basically like a range of winning. And so, like for example, the covered calls, they're very good premiums, but it can't go above 25 in 2 weeks or less. So I win if that's the case, and I don't think that's going to be the case, especially days like today. And I might even buy back the contracts. I think, let me check what the value is on these contracts. Those 25 strike contracts they should be like almost worthless. Okay, they're down 50% today. I guess I have to wait till the end of the day for my broker to reprice them, but they should be down quite a bit more than 50%. So we need to get right up. Yep, that's true. Holy shit, they went from 6 million to 330 million in 1 year. Yes. So they were basically like a shell. And the way you can think about it is they went from a shell to actually doing something. So there's an actual business growing in there. And the current CEO was higher up at Dell that basically moved over to this company and then got them the Dell business. So there you go. Connections matter. Okay, so I pitched on Chit Chat Stocks, a insurance business. They're reporting today, NMIH. So I'm watching out for them. I'm getting one of my bank holdings reporting today, one of my small banks. And yeah, that's really about it. Elf, Amazon. So it's like 4 earnings. But one of them is having their earnings call tomorrow morning, the bank. So yes, Mark, connections. That was basically the success of TSSI. So then if they get a second customer, the story now just dramatically changes and it becomes more, I think, more investable for a lot of market participants. I don't have a comment on that, but unfortunately. Oh yeah, all the club members are coming out and we're like, haha. All right. Oh, as a reminder, because we seemingly keep getting more and more people onto the live stream. If you're going to join the club, warning: do not use the credit card link. Please only use the PayPal link. If you use the credit card link, there will be a problem, unfortunately, and it's something I can't help you. It's actually a Stripe issue. So, warning: do not use the credit card link. Use PayPal. A lot of people prefer to use PayPal. Not everyone, but a lot of people prefer PayPal. So it shouldn't be an issue. But for the time being, Stripe is going to do a boo-boo, oopsie. Big deal with TSSI was an overhang. My opinion, that was they signed a 3 to 5 year agreement with Dell. Yes, they now have. They also have a long-term agreement with Dell with some minimums secured. Many are saying SMCI is a good risk reward at these levels. Have you looked at it? No. I think SMCI. There's so many questions about fraud. Too much for me to get into. I think it's a good risk reward. Just a trade though. Okay, yeah, that's fair. Yeah, because it's there's a lot of pessimistic we'll say vibes, aura around it. Yes, what Andrew's saying. Okay, I know that some of you wanted me to go for the full hour, but I think it's a good place for me to stop. And just a reminder, thoughts on Roku? I have no thoughts on Roku. I don't see the moat that they have, but so I apologize. Just came in. What's the deal with TSSI? Oh, I was just explaining the bullish thesis. If Kathy owns it, you shouldn't. Buffett, Oxy crying right now. Wait, what's happening to Oxy? Oh, I typed it wrong, but Google corrected me. Oh. Okay. I guess energy is falling. I had a concern with energy and I sold. Let me see what Repsol. Oh. Okay, so it's not entirely collapsed. And then let me check others. Yeah, what the hell's going on with energy today? All right. Oh, is dumping as Trump wants to make a peace for Russia and Ukraine. I got to catch up on the news. I haven't seen the news today. I've been here with you guys. Let's wait, let me see what's the news. U.S. set to unveil Trump plan to end 3-year war in Ukraine. Interesting. Well, I guess we got our answer, Viv. It's peace, potentially peace in Ukraine, peace talks. Look at the BIV. I have no idea about their pipeline, so I can't make a comment on them. They kind of fell off a cliff with their pipeline, is all I know. Oh wow, yeah, she's an interesting person. She's been through this rodeo before, .com bubble and the like. But yeah, BIB. You have to comment on their pipeline right now. Vertex Pharmaceuticals is the king of the game, among the best pipelines, along with Eli Lilly, AstraZeneca. Kathy is actually brain rot. Agreed. Yes. Yeah. A lot of people don't read what she was like in the .com bubble, but she was doing the same old playbook. Pabrai Wagon Fund versus Terry Smith. Oh man, I find buying shittiest companies is concerning. Yeah, and people buy it. They still have a pretty good AUM for what it is. So, but yeah, back to Biogen. I mean, they don't have the pipeline. It's a value trap. You have to really believe in the pipeline. I have no comment or opinion on the pipeline, so I can't say either or if it's a buy or short. No idea. Well, remember, Mark, she has a tax asset that is an underappreciated asset in this world. We have to remember that. Okay. With that being said, I'm going to leave you guys off here. Thank you guys so much for joining. If you guys like the live streams at this time, let me know. And thankfully, in my current work, I can make changes and be flexible because I am, frankly, I'm my own boss. So you let me know and I will make that sacrifice because it seems like it might be something that people are interested in and better than a late night one. And frankly, I have more mental energy at this time than doing it after work. So then I can just do this and then finish up whatever work I have for the rest of the day, and then just, you know, go to sleep at not 1 a.m. when I stream. It works for me. So if you guys like streams at this time, I'm more than willing to make that change. And honestly, this gets through my morning. So my morning is usually the one I can't really give out, but too much shirt wearing on stream. Okay, so I got to make some adjustments. We can do, oh, it looks like for the Euro people, it's good for you guys. And I have a lot of European audience members. So this time is better. All right, I hear you guys loud and clear. I will try to do this time more often, and then just kind of shift work schedules around and meetings around. All right, but I have a meeting at 4 o'clock anyways. So I got to make sure I'm free for that. You love this time too. All right. I hear you guys loud and clear. So going forward, I'll see if I can do this time. Andrew will hate this because I don't think we're in a different time zones. And so he's going to be like, I can't make these times. So we'll have to do like 2 kinds of live streams. Yeah, I'll mark it down that this works. If you guys enjoyed the live stream, feel free to leave a like, subscribe, comment after the stream is over. That does help the channel. If you guys are interested in joining the Capital Mindset Club, let me remind you yet again, the link is in the description below, but do not use the credit card link. Use the PayPal link or use the PayPal version. Right now, at the present moment in time, the Stripe one is going through an issue. So if you do that, I will not even be able to help you. My hands are tied there. So that would be very unfortunate. While I accept donations, I don't want to, accept your donation. So yes, that's the last bit of housekeeping. Other than that, and again, if you're on Twitter, retweet, heart it, wherever you are. Just let me know that you like this content and it keeps me going. I'll be seeing you guys on the next one. Bye. I'll leave you guys with this outro.
Okay. We'll do it live. Okay. We'll do it live. F it. Do it live. I'll write it and we'll do it live. F***ing thing sucks. Yeah.